We start in the hog markets. In the latest quarterly hogs and pigs report, the USDA said all inventory was up, but only by 2% from March of 2011. When we talked to University of Missouri Extension ag economist Ron Plain on Tuesday, we asked if he was surprised by such a low number of growth.
Well, if you look at the pig report, it's sort of a bad news, good news story. The total inventory up 2% was a bit higher than what I was expecting. But on the flip side, farrowing intentions for spring and summer combined down over 1% was lower than I was expecting. So in the short term, maybe a few more hogs than we thought, but longer term, second half of the year into 2013, looks like there's not going to be as much growth as we'd thought there would be.
So what do you think the reasons are behind that, Ron? Because when we talked, a month or two ago, we thought that the prices were supportive enough that we might see growth in the farrowing sector.
I think it's been a risk factor largely. A lot of volatility in the markets and a lot of concern about feed costs. We've had record corn prices at times over the winter season. So left a lot of producers uneasy, and I think that caused them to scale back some of their growth plans.
What are your thoughts on inputs now? Corn report, or the prospective plantings numbers last week showed that the acres for corn were going to be up, but the stocks were down. So in terms of input costs, are those going to remain high over the summer?
Well, it looks like, sort of the same sort of story. The stocks, how much corn we have on hand is tight, and that's going to keep short-term prices up. But prospective plantings are huge, up 4% from a year ago, most acres since 1937. So that should give us a good harvest and plenty of corn in 2013. So the story is continued high corn prices, but then a pretty fast drop-off should come during the summer, and quite a bit cheaper prices come fall.
Right, and as you mentioned before we talked on air, some people in Missouri, or a decent number in Missouri, are already starting to plant corn.
Yes.
The profit margin, it's going to be good this summer, or at least better than it has been, correct?
Yes. Well, seasonally, hog prices are normally at their highest of the year during late spring and summer. We expect that to be the case this year, and in fact may hold a little better in late summer than normal. So some good profit margins are in the weeks and months ahead of us. Always the fourth quarter of the year is the toughest quarter, and with the falling corn prices that we should get, if the weather cooperates, then profit margins may shrink, but still not be as bad as normal in November and December.
On the show here, we've been talking about packer margins when it comes to the cattle markets and how much money they're losing, but the packers in the pig markets aren't making any money either.
That's true. If you look at carcass prices for hogs, has been running 100, 101, 102% of the cutout value, which means packer margins very, very tight. It was not a good first quarter for hog packers. At some point in time, they're going to figure out some way to get their margins back, and that'll probably mean a tad bit lower hog prices than otherwise.
Yeah, and do you have a feeling on that, Ron, as to how far they can stomach it?
Well, as we move into summer, normally the number of hogs slaughtered on a daily basis declines, so it's going to be a tough challenge for hog packers to generate much improvement. It could well last to mid-year before we see a real turnaround in packer margins.
Give me your thoughts as far as the consumer goes as to what they'll be seeing in the meat counter or over the meat counter.
Well, per capita meat supplies is going to be down 3, maybe 4 pounds per person this year. That's going to mean continued high prices for poultry and red meats in the grocery store, so not a great time to be a shopper.
Yeah. Overall, though, if you're a farmer and you're producing pigs, a good time for them?
Yes, it looks like a fairly good outlook following the pig report and the prospective plantings, lower feed costs, and not much of an increase in hog numbers. So it should be a pretty good time to be in the hog business.